We're going after greenfield markets. I don't have answers to any of those things. I'm interested in founders who know what a small neural network is. These customers are so stupid, they don't know what they're doing. You can turn cows into C++ objects. They can have APIs, right? Like, how much would you pay to watch your kids grow up? But I'm not looking for bold, ambitious entrepreneurs. As eighth graders can launch a satellite. We have 1 foot in today and 1 foot in tomorrow.
Meet Sunil Nagaraj, founder of Ubiquity Ventures, investing in software beyond the screens, software that may be improving the milk you drink to the school bus your kids may be riding on.
Every time one of my CEOs raises capital, we have a secret event. You get to define reality.
Welcome, Sunil. Excited to have you on this show today, and thank you for joining.
Hi, Nilanjana. Thanks for having me on the podcast.
Excellent. So I have found out that if there's one person who knows everything about the piano, it's you.
That's right. Maybe you read up. I enjoy it, but I actually just enjoy going deep on anything. I enjoy hanging out with people to go deep on anything. The example with the piano is probably lots of people play piano and their parents made them play piano. But when my piano tuner comes over, it's supposed to be like a 1 hour. They work on their own. Every time he comes over, we hang out for 3 hours. We talk about every screw and bolt and every technique. If you want to see someone's eyes light up, he talks about the hammers and the technique for making piano hammers. So longer than you care to go into, but basically just nerding on a piano is something I love to do.
So you're a nerd at heart. You love going deep. You have your pet subjects, and I imagine one of them is technology, right? So, and so you're a CS grad. You're an HBS MBA major. You did a stint at Bessemer, and now you've been launching and been very successful at your own firm as a solo GP at Ubiquity. I love that name. And I also sort of just watching you, I feel like, oh my God, Sunil is ubiquitous. So unpack that name for me.
Of course. So I knew when I left Bessemer, I was there 6 years, I wanted to start a pretty technical firm. I wanted to bring some of the best parts of my old firm with me, leave aside some of the parts I didn't like. And that led me to this thesis of finding companies that are bringing software into the real world, making it ubiquitous. And the way that plays out is that I have 45 companies now, about 200 million under management. Every single company takes software off a computer and puts it in the real world, solving a real world physical problem, making technology ubiquitous in the real world. That would be the nerd description. We could have the fancy finance description, which is that we're going after greenfield markets with very low levels of competition that haven't been addressed by technology to date. But this idea of ubiquity and ubiquitous technology is something near and dear to my heart. So picked the name 9 years ago, and it's stuck really well with me.
Excellent. So there's a nerdy explanation, which is sort of, that cool technology that can be anywhere, everywhere, in the wild, in the field. Of course, there's a business explanation, right? Penetrating the physical world, have you? I really like the nerdy explanation. So let's just double click on that. So, what's an ideal founder for you? Because I'm looking at your investments. You have investments across lots and lots of business markets: agriculture, climate, consumer space, maybe. So just unpack that for me. Like, you clearly are like the nerd side of it. So you're bringing a nerd angle to it versus the market or vertical angle to it. Is that right? And how do you think about what's the right investment for you? What are you looking for?
Yeah, so you've clearly done your homework. What you're talking about results in awkward conversations at VC events, because folks will say, are you a consumer investor or a SaaS investor? Are you focused on supply chain? And I don't have answers to any of those things. I don't mean to make myself a snowflake like I'm that special, but the way I approach things actually is from a technical utility belt. I'm
Mhm.
interested in founders who know what a PCB, a printed circuit board is, who know what a small neural network is, who know like sigmoid functions in neural networks, who know computer vision. They take these pillars of technology and then go out and solve a wide variety of problems. So I come at it from the technology insertion point, maybe is one way to look at it. At the same time, I have some softer skills. Maybe they're not that soft, but I am looking for folks who have years of domain expertise. You've probably heard this too. You've been doing venture way longer than I have, Nilanjana. And I think sometimes you'll hear someone say, if they're going after a new market, maybe an offline market or maybe a backwards market. These are dangerous words, by the way. A backwards market, they will make fun of their customers. They'll say, "Oh, these customers are so stupid. They don't know what they're doing." And that is like fingernails on a chalkboard to me. So I have investments in companies that put software onto farms or software into cows or software into space. And it would be easy to put down a customer as being stuck in the old school or not doing what's best for them. But all of my founders, because they have years in those sectors, would never talk that way. And I think that's an important thing. The culture of the company is that way too. They are shepherding their customers to new technology as opposed to saying, "You're so dumb, you should do it this better way. Here are the Excel numbers that prove the ROI." I think there's
Mhm.
a level of empathy and connection and understanding to help old industries walk into the new model as opposed to just sort of forcing it on them.
That's an excellent way of framing it. So, very deep domain expertise in something, and it sounds like product-centric domain expertise. And then number two, understanding and respect for the market that they're trying to evolve, change, in a very sort of growth mindset way, right? Bringing that market forward into technologically business wise. Okay, excellent. How about a few examples? Like you want to give us some
Yeah,
examples?
that's a great question. So within the first year of launching Ubiquity, I launched in late 2017. I met a founder. He had come recommended from Rocket Lab. Rocket Lab is a very successful investment in the past. Now a $45 billion public company. The founder of Rocket Lab sent me one of his old employees. I met him in Palo Alto. He had grown up on a dairy farm. This is a farm of cows on a pasture, not factory farming. And he was a mechanical engineer, had worked at Rocket Lab, 20 years on his family's dairy farm, knew the industry cold, grew up and lived in New Zealand. New Zealand's biggest export is dairy milk. So there's all sorts of like just credibility and expertise around it. We met up at Il Fornaio in downtown Palo Alto, just recently closed after so many years. And we met up there, and in the span of 45 minutes, we covered this sort of breakthrough idea that with a piece of low cost smart hardware, a $100 collar you put around the neck of a dairy cow, I'll give you the nerd description. You can turn cows into C++ objects. They can have APIs and methods. You can write script. You can have cron jobs. I'll give you the business description. Um, this company Halter allows dairy farmers to run their farms as if they were run their farms to achieve more profit, lower cost, have more milk production, sort of dial the knobs a little bit more scientifically than they can with traditional methods, which includes dogs and clipboards and metal fences. So against this backdrop, he shared this vision for me. He had built one or two collars. He had put it on one cow. And we spanned the gamut in that 45 minutes. We talked about lithium ion batteries, about solar panels, about LoRa protocols. We talked about dairy farmers. Somewhere in there, I think I asked him, "Oh, so if you can make the cow move, can you make him go in a circle?" And he looks at me again. He's an entrepreneur trying to impress me. And he looks at me and says, "Sunil, they're not circus animals." So, like, this is what I mean, Nanja, by that empathy for
Yeah.
customers. Like I was nerding out on it, and he was like, "No, we're not going there. These are real animals. These are real customers. These are real businesses." So I co-led his seed round, and now Halter last summer, announced their $100 million financing at $1 billion valuation. They're on well over 500,000 cows daily. That's over 1,000 farms, and farmers open up their app on their phone, move their finger on their phone, and 500 cows turn and start walking one direction. So to me, this is an example of what I call software beyond the screen. Software in the real world where it's never been before. It was never on a big grassy field. It uses a little bit of smart hardware. We're not enamored with the hardware, but we are enamored with solving the problem. And once we have that substrate, in this case, I literally mean substrate like a collar around the cow, you can then write code. And you and I, even if we just know like Excel macro coding or JavaScript or SQL, in 10 minutes, you could write code that'll run a whole farm. We never had the ability to programmatically address different elements of the farm. But once we have those insertion points, now you can write code really quickly. And so this is a theme of a lot of Ubiquity companies is
Right,
turning it
right.
into a coding problem.
Yeah, I love that. Turn cows into C++ objects. But said with a lot of respect for that industry and a little bit of humor.
Yeah.
Love that. So congratulations. Sounds like a fantastic investment. We can I can spend hours on that because it's actually farming it's a special interest of mine. So we'll take that offline for another time. This is great. Now, AI can make a lot of difference in a lot of industries, right? Software can make a lot of difference in many industries, but in these physical industries, the order of magnitude of improvement is dramatically more than what you would find in already efficient industries like the software industry. So the return on that investment could be tremendous. The growth of that business can be tremendous because they're bringing such massive efficiencies to, a
Hmm.
business that's been sort of done the traditional way for hundreds of years.
Hmm.
Fabulous. Just what are some of the learnings? I mean, these are also not easy industries to build businesses in, right? So you've
Yeah,
had a lot of learning in the last 4 years. It
yeah,
ain't easy to go sell, I imagine, bells to smart bells to farmers, right? I mean,
mhm,
there's a sales cycle, there's a technical understanding gap. Like, just tease apart sort of what are the learnings that you have seen over the years in these types of traditional industries where a lot
yeah,
of founders get tripped up, right? So,
yeah.
this it's great to hear the Halter is succeeding so well. But what have you seen the typical trip ups where someone
And
coming from the tech industry goes into an old industry like agriculture and has some trip up moments?
yeah, this is a good question. It's arguably where I spend most of my time with my portfolio. I do pre-seed, seed, a third of the time day of incorporation, and I rarely have to weigh in or help them with the technology. But this notion of making your first sale, figuring out how to position the technology. I like to think of this framework of look what I built versus look who cares. And in this context, look what I built means if you're a PhD in electrical engineering, you want to talk about how cool the PCBs are and how small the traces are on the board and how tightly you packed things together, or how long the lower range is. It's 200 meters. Customers, though, may want to say, "Oh, so I can have it work on both my farms," right? There's just different language between like the technical feature set, the spec page, and sort of the customer understanding. And so, all my founders, technical founder, I really only back technical founders, go through this journey of awakening, a journey of humility, actually, because it's like I spent all this time learning the technology, and you're saying it doesn't matter. Well, it does
Mhm.
matter, but you don't really talk about it. I actually think it in a funny way it applies like having an MBA. You spend 2 years getting an MBA, and then you should never really talk about having an MBA, right? Like, nobody wants to hear about it. They wanna hear about the output from it. They wanna hear about your smart comments about business as opposed to hearing that you got an MBA somewhere. And so, in this case, Halter in particular had an interesting journey where the first wave of the company, first few years, we were positioning, I thought brilliantly, as a company that would help dairy farmers. Even this was even in their video commercials. The customer would say out loud, "I love Halter because it lets me watch my kids grow up." Right? Like, how much would you pay to watch your kids grow up? And again, the idea is it's not the LoRa or the battery power. It's that you get free time because the cows are digitally shepherded and shifted automatically. So you have more free time to watch your kids grow up. Smartly, though, as interest rates changed and mortgages on farms changed, it became less important to watch your kids grow up. It became more important as a farmer to not lose your farm. So we did a massive shift to very hard ROI metrics, including a calculator, including features in the app to show you how much dry mass and things like that in numbers. And this was smart. So neither of them were about how cool our features are. They're really cool features, by the way. But it originally was watch your kids grow up, and then later it was improve the profitability of your farm so you can pay your mortgage payment. And I think this is the tension because in tech, this is a tension. In deep tech, it's definitely a tension. You have to be so good at the technology, but then you have to put it off to the side and just focus on customers. And maybe you
Right,
call this product marketing, but it's a journey that is really tricky.
right.
Many people don't make that switch, but all the ones who succeed do make that switch.
So it almost sounds like, these industries that tech is going into are so new that these companies are almost sort of charting the way in figuring out the market, and every journey is individual. There's no playbook here that they can use.
Yeah,
There's no SaaS playbook, do marketing this way. What the CAC is supposed to be. Here are the best practices. It's almost
yeah.
like this is novel territory and really understanding the industry closely, adapting quickly. How about capitalization? So, so that can take some time. How do you think about capitalizing these companies so you're not out of
And
money before you've figured it out and
it's a
before
very good
you've
question.
shown the revenue, right? Because the rest
Yeah,
of the venture world hasn't quite caught up with the cutting edge stuff you're investing in. They probably want to see, the upstream guys probably want to see some revenue and metrics, and you want to make sure that
yeah.
there's enough time here.
So I'll let's start with the I'll have two angles on this. The first one ties to what you said with the playbook. I've been at this 9 years as Ubiquity, 15 years as a VC, but under the Ubiquity banner, for most of the time, I believed it was really a liability that we didn't have a playbook because we didn't know how to do it. More importantly, when we're fundraising, we had to like we had to teach the Series A investors like what this means, like um, um, moving the cows 6 times a day. Is that a good or bad thing, right? Like, that's so annoying. If we were just a SaaS company, they would have frameworks like CAC and LTV and Rule of 40 and all this stuff. In the last few years, I've come to realize completely the opposite. This is the biggest asset. We get to teach you're talking about teaching customers and guiding
Hmm.
them through the digital transformation. Here, we get to teach Series A investors. We get to, it's going to sound very manipulative, and it is. We get to hand them the rubric that they will then grade us by, right? So if we're a deep tech company, one of my companies catches photons, individual photons one at a time, by the way. Sunlight's like a quadrillion photons of flux in a square inch. So one photon at a time. And so when we go to them, we can say, look, we're able to take a picture of a trillionth of a second. Now, most people don't know what that means. And I used to lament that. Now, what we can do with just a little bit of positioning is we can say, listen, I started this company because the fastest cameras in the world could take 1 billion photos in a second. And that was pretty good, but it cost $1 million. I wanted to take 10 billion photos in a second. I have good news. I'm already taking 1 trillion, right? You see, you get to like incept this emotion when you're in the deep tech. So I like to say we invest off the beaten path, but not off the deep end. But once you break from the beaten path, you can either consider it a liability or you consider it like a great new place where you get to define reality. You get to define the rubric. You get to define. And so I like that part of it as it relates to financing, risk, and capitalization. I help my companies a lot with fundraising. And that's a big part of the story is planting a credible set of milestones, getting shared consensus, and then showing you're beating those milestones. So that's half of one way to look at it. You might call that perception management or something. There's another way I look at capitalization, Nilanjana, which is a bit more controversial. I call Ubiquity a deep tech firm. I do quite a bit of space investing, some hardware stuff. Most people I know would say, "Yeah, Sunil, but space is really hard. Elon says so," or they'll say, "Hardware is really hard. People lose their shirt in hardware." Now, the first comment is, don't listen to what people say. Like, that's just a good piece of advice for life is when everyone knows something, that's probably the right time to zig or zag. But in this particular instance, the way I operationalize that is that I'm not looking for bold, ambitious entrepreneurs. Like, how does that make sense? I'm a VC, I do deep tech. I'm not looking for bold, ambitious entrepreneurs. I'm looking for entrepreneurs who are careful, like surgeons, of slicing off a piece of risk and getting the most bang for the least buck. And so, what I haven't done, like, I haven't done a large strawberry picking robot with lots of arms and it's so cool. I have more precise ways of describing why it's annoying and the service interval and the cleaning network and the card and the bomb. But a lot of stuff I like is solid state. It's like a small bit of technology. Think of Halter being small to collar, or think about other companies with just a little bit of technology, the substrate, and so then the capitalization shrinks dramatically. I Under Ubiquity, I haven't done like a big rocket. I did that at Bessemer with Rocket Lab, but I'm looking for highly leveraged, not with debt, but highly leveraged, where a small amount of capital can unlock a lot of business revenue without a long development cycle. So what that does is it slices off probably 90% of what people call deep tech. So my answer to capitalization is just be really picky about figuring out your sliver. With my current $75 million fund, I want a $1 or $2 or $3 million check to get a company from incorporation to first product in customers' hands. That's crazy, right? How could $2 or $3 million in deep tech get a working product in customers' hands? Well, it just means I got to be really picky. I got to keep my blinders on, and that's how I solve that one.
Okay, no, that's well said. So if I play it back to you, deep tech investor, there are lots of deep tech investors. So you are a disciplined deep tech investor, as in you're shying away from the massive COGS types of investments. So, it takes 500K to build this robot. You're looking at those deep tech investments that are relatively capital efficient, founders who are sort of surgical in their use of capital and attaining the milestones. You're obviously, I'm sure, you're not bragging about it, but I'm sure you do a lot. And I did look through the Ubiquity University, and we'll come back to that. You're coaching and guiding them to the milestones that matter to get to sort of success metrics. And then, because you're charting new territory, you're educating upstream capitals on what the grade book should be so that all your portfolio companies get an A. So
That's perfect. I wanna I'm glad we're recording this because I'm gonna use that on my website. That's exactly the super secret,
uh,
Sunil Ubiquity playbook.
yeah,
That's right.
fabulous, fabulous. So let's shift gears now. You're a solo GP. You're ubiquitous. I really admire you for being ubiquitous in not just your investing, but personally. I mean, you're doing a lot here. You're being a value add investor. If I We should also get into portfolio strategy. You're not a spray and pray investor. You do high conviction investing. So you're taking some meaningful stakes in these companies. You have to be available to them. How are you pulling it all off? And what's the role of Ubiquity University in all of this?
Yeah. That's a great question. So maybe I'll recap the basics. So I'm currently investing out of a $75 million fund. I I like the idea of disciplined deep tech. That might be one way to look at it. It's focused on software beyond the screen. I write one, two, $3 million checks, often the day of incorporation. Um, my own mental model is informed by Bessemer, where I want to have a portfolio of about 20 companies, like a normal Series A firm. I want to buy 10 to 20%, like a normal Series A firm, and I actually take a board seat, which is extremely rare at the pre-seed seed stage. And so many ways I treat pre-seed and seed companies like the Series A companies they want to become. And the idea is, I have a daughter, and I've always talked to her like an adult, and I think she'll become a better adult because I treat her like an adult from the beginning in terms of explaining things, communicating clearly. And so, in this case, that's how Ubiquity feels is a relatively small seed portfolio of founders in a similar sector, approaching similar problems. And so we have one way that I'm able to juggle the pieces is that the companies have a lot of similarities. They have a lot of cross collaboration, and so we have a few events throughout the year. Every time one of my CEOs raises capital, we have a secret event for all the other CEOs, and that CEO shares all their secrets. As of January 2026, how did they raise capital? What are the right word to use? Is it NDR or NRR this month? Like those kind of tricks and tips. And so there's a little bit of a flywheel, a snowball effect between the CEOs because there's that kind of chemistry. Once a year in September, we get together 30 CEOs and 30 of my extended team. This is a nerd crew of helpers that I've assembled. I've known these people for 10 years or longer. We get together at the Computer Museum, spend a whole day nerding out on technologies and helping to grow these companies. You can kind of think of it like speed dating between the extended team and the CEOs to get stronger advisors. So this lets Ubiquity punch above its weight. Another thing we do, I don't talk about it a lot, but in August, I take some of my later stage CEOs on a trip. We spend 2 days at the beach, hot tub, dinner, emotions, crying, bonding, and it's a really fun, fantastic way to cement those later stage relationships. By the time of a Series B, I actually don't have much to teach or share. My specialty is seed, like what do those first couple years look like? But at Series B onwards, you'll have folks like Craig at Halter, Yadu at Esper, Keith at BusRight, and they're trading lessons. And my rubric for that event is, are they close enough that they'll call each other when they get in trouble in 6 months? They may not call me at that point. And so I have lots of different ways to sort of build on the momentum. Now, Nilanjana, you mentioned Ubiquity University. What I realized is that for my seed companies, I was often sharing the same advice twice. In programming, there's this idea of don't repeat yourself or refactoring your code. If you write code once and then tomorrow you write the same code to do it again, you should actually copy it into a function, and then you call that function. That's what refactoring is. So that's how I think about Ubiquity University. I started offering, well, somebody would ask me, how much equity should I give a new CTO? And then 2 weeks later, a founder would say, how much equity should I give a new CTO? And I remember at first being flattered. Wow, people want my brilliant advice. Eventually, I said, you know what? Let me up level the advice. I'll make a few slides, I'll record it, and I'll put it out there. It's not necessarily a podcast, it's bite sized 5-10 minute helpful videos for how to execute common startup tasks at the seed stage. So it's about 50 videos, practical how-to videos, how to make your first cap table, how to build your first financial model, how to conduct early customer development, how to run a board meeting, and what it does. Initially, it was going to be secret, by the way. It was only going to be for my portfolio. And big thanks to my coach. He said, Sunil, let's use this as sort of a way to put yourself on the map. And then you have better advice when you talk live. This isn't even your best advice when you record it. So that was a sort of a mental shift. And now it's out there. It's used by many universities for education. It's used by startups, I think, broadly. And then I invoke it. So if one of my founders, this is a little obnoxious, I'll admit, but if one of my founders asks me a question over email, hey, do you have 20 minutes to talk about this? I'll often just reply with the Ubiquity University link. And now they actually realize this is better than getting time with Sunil. So part of it is removing myself from the loop, up leveling the advice. And so those are
Yeah,
two
and
techniques to sort of juggle all
absolutely.
that.
Yeah, so excellent there. So a lot of cross-pollination mediated by you between the portfolio companies. Real face-to-face time spent in quality settings so they can bond amongst themselves and leverage each other. And then love the university, Ubiquity University video bank. I
Mhm.
should go look and send those answers to my founders. So that's a great way to fantastic ways to scale yourselves and be available to your founders as and when they need it. So excellent. See, l- how about sort of shifting gears a little bit? I think as you look to the future, where do you see a lot of investors are entering this space now, which I think validates your focus. As you look forward, as you look at the developments of LLMs and the pace at which sort of AI is developing, AGI may be here soon.
Mhm.
What what is exciting, and what would you be cautious about, and what should a founder be excited about, and what should a founder be cautious about as they look at these physical industries markets?
Yeah. These are good questions. Maybe you feel the same way, but I don't think there's ever been as confusing as a time to be an investor as 2025, 26. Part of it is that our livelihood depends on like 2 years of engineering work puts distance between you and the competition, right? Like that's
Yeah.
like sort of a critical pillar of venture capital, and that may
Mhm.
be gone, right? Like we're not sure right now if you're using Cloud Code and Codex and doing stuff properly. Maybe 2 years becomes 2 days. And I will say at the moment, in the last 12 months, the volume and quality of pitches I've received has not reflected that it's super easy to build anything, right? I think it is possible to build like toy MVPs, but in terms of the number of folks building like fully functional products with customers, to me, that hasn't changed a lot. I do think my startups in the last 3, 4 months are starting to actually talk about finishing out more of their roadmap using AI coding tools. So that's one part of it, is sort of optimizing the internal engineering velocity using AI. At the moment, it hasn't sped up ideation to fully functional product as much as you would have thought. But all this stuff's evolving. It was really just a year ago that we started talking about Claude and Claude Code and things like that. Another way I look at AI is, especially in the ubiquity theme of software beyond the screen, is interfaces, right? That you can now have something in your ear. One of our companies, CropTide, they allow you to have something in your ear, and you're walking along your farm, and you can report stuff, talk to it, get reports, and things like that. So it's a new way to interact. This is reminiscent of mobile, right? Mobile allowed you to access stuff on the go, and this is another form factor modality. So I think there's a lot to explore there. And even back at Bessemer in probably 2014, I gave a talk to the whole firm about deskless workers and how this is a category. And I think that led to Service Titan and a few other investments along the way. So there should be new places to bring technology because of AI and LLMs. And then there's the highest level way I think about AI is it's able to understand complexity at a level that we never had before. You know, even the inside of an AI model, if you think about neural nets, it's kind of like you could have had if then statements. If you push this button, do that. But a neural net is sort of a super nuanced if then statement, right? Random forest, big tree. And another way to say that more colloquially is like AI can handle the complexity of the real world, right? This is why Waymos in Palo Alto are now driving up and down, because there's a million things that could happen, and they've actually been trained on like a million things, and they actually can remember a million things. And so there's more places for AI to, this is, ubiquity theme is software can now navigate, understand, perceive, actuate the real physical world because it has the sensors. This would be like a super cheap time of flight sensor, like the real sense sensor, which is now $100, as well as the software inside to make sense of it all. To 5 years ago, it was recognize the pattern. This is a cat, this is a dog, even when there's a tree in front of it. Now it's actually closed loop control. Now with Tesla end-to-end mapping, where you go all the way through and trigger stuff. So that's always been part of the Ubiquity vision, is we can understand the real world, decide what to do with pattern recognition trained on historical training data, and then trigger the action. And that's even true for Halter. Now you have closed loop control of the real world. And that means things can be on autopilot. And I think these are exciting. I still am not sure, and I'm always looking, where's the best place for these ideas to play out? How much defensibility is there in AI? And I think a lot of VCs are asking those questions right now too.
Yeah, yeah. So absolutely. I think we also agree because a sort of each of our funds, we're not 100% dedicated to the physical world like you, but a sort of our funds have always gone since the very first one to the physical world idea. It is absolutely not an easy space to invest in, but more defensible in a way, right? Because of all the things that we talked about, right? The market dynamics. And here, the role of AI subtly has in many ways, made it easier, faster to bring a more easy to adopt, easy to understand solution to these markets, right?
Mhm.
So it doesn't have to be a complex piece of software. It could be all that complexity can be hidden with a simple voice interface or a compelling, video interface. So those, I think, sort of the UI challenge has been solved. The complexity can be hidden. Someone
Yeah.
doesn't need to sit behind a computer in the farm to run this thing, right? So
Yeah,
a lot
yeah,
of
let me, bring up an example there. I haven't made enough investments in this category, but you and I don't need, like, a manual on how to use a cup, right? You just pick it and grab it. One of the investments and areas I'd like to invest more in is sometimes it's called the silver tsunami or elder tech or age tech. Um, at CES, I was there. AARP has, like, 40 startups in this booth, so it hasn't quite hit, but it's, like, on the cusp for a few years. I have an investment in a smart elderly walker. So sometimes it's called a rollator. You hold it and you walk, and it's got maybe tennis balls on the bottom. Our smart elderly walker has cameras to see, so you don't go off the edge of a sidewalk. It has motors in the wheels, so when you're going uphill, it just helps you a little bit, and when you're going downhill, it slows you down a little bit. It can watch your feet and sort of report your gait. Now, the key to all this is there's no interface. You just see it, you grab it, and you start using it, and it kind of does what you think it's going to do at the right time with no surprises. And so it might be called this ambient technology or no manuals
Mhm.
technology, but I do like that idea of things are so intuitive. And that can either happen because you're Steve Jobs and you have great design, or you have AI that is more than meeting you halfway as you use that technology. And I think that's a
Yeah.
promising use of AI.
Yeah, absolutely. And I think that also I think, opens up a massive new next generation of consumer devices, and consumer has been sort of a little bit dead in the VC world for the last decade. But I think there's massive opportunity for consumer to do a comeback precisely for that intuitiveness that AI can bring to software devices aimed at consumers. Okay, let's shift gears a little bit here. You mentioned space. You've done some
Mhm.
space investing. Um, in the VC world, it seems to me like there are people who are gung ho about it, are going all for it, understand it, and there's a big majority that's like, oh, too expensive, and hasn't Elon conquered all of it anyway? So where's the opportunity for us, right? So just for those that are not in the depths of space investing, distill what is that venture opportunity in space, right? And then broadly, and then what is it that you're interested in and focused on?
Yeah, so the history here may help connect the dots too. In 2014, when I was at Bessemer, we had a great exit, probably one of the first, if not the first, like new space startup exit. And as VCs, once you see an exit, then all the VCs rush in and see what else could be invested in that category. We'd invested in Skybox Imaging. This was a satellite about the size of a mini refrigerator. It took pictures from space, so it was a geospatial imaging constellation of satellites. They had 4 or 5 satellites up on orbit around the Earth, going around every 90 minutes taking pictures. And Google bought them for $500 million. So the Skybox acquisition catalyzed a lot of interest. At the time, everyone at Bessemer was interested. David Cowan my colleague had led that investment. Everyone said, "Hey, who wants to dig into this category a little more?" I raised my hand because I love astronomy. Turns out that was a little bit of a mistake. Astronomy is like galactic center and black holes and cosmology. Space is LOX kerosene and orbits and X band and S band, totally different ideas. But I dove into it super deep because I like to nerd out on stuff. This is my coffee mug. I started hanging around the Stanford Student Space Initiative, which led to an investment in Winborn and a few other things. But just sort of hang out with as many nerds in the space category as possible. And I started to see the answers to your questions, which is like, why did space become interesting now? There's a few components, and the part I love is it mimics a lot of the tech world. So you could argue that MySQL, right, an off-the-shelf free relational database, was critical to Web 2.0. The idea of like a LAMP stack or Ajax framework or React, like there are these frameworks and tools that make it easy to just plug and play. The
Hmm.
fact that AWS and EC3 and the other clouds implement similar API, like these are ways that accelerate the building. With space, I'm here in Palo Alto, where about a mile away is SSL They make the huge satellites. Those are very custom. They cost $500 million. They take 5 years to build. But Skybox was using small off the shelf parts, kind of like MySQL, They were assembling them quickly. They were using updatable software. So they were operating as if they were a Silicon Valley company as a novel arrangement of off-the-shelf pieces. What that does is it lowers the capex. It dramatically reduces the risk. We're not plowing into the void, crossing our fingers. I hope it works, kind of like nuclear fusion today. What we're actually doing is we're on a predictable like Gantt chart, the same way that if you and I were to build a typical mobile app today, we know it'll take this long to do this long to do this. And this is where VCs can start to see a path to invest in, like a predictable ramp of feature development where you can retire risk early for reasonable amounts of capital. That's the definition of tech startups, and space startups started to fit into that. We
Okay.
eventually invested in Rocket Lab. We invested in Spire. Under Ubiquity, I've invested in Loft Orbital, Muon Space, and a new space company here. But I'm looking for those themes and trends that bring predictability. It's not like I'm going to be bold and ambitious. Look at me, a moonshot. I hate that idea. I like predictable, thoughtful, iterative development, and more of that's coming to space.
Okay, so just playing that back to you, and by the way, I do hope to have David on this show because now David may be taking at best. This is David Cohen and at Bessemer, who's been doing a lot of the space investing and has had some good successes, but his filter may be more of the moonshots, right? They have to put a $3 billion fund to work.
Mhm,
You're saying there's enough of an opportunity in space. The market is big enough now where there is opportunity to build things better, faster, cheaper for that market. And
mhm.
you're looking for that better, faster, cheaper, modular, small amount of capital to get a hardware or piece of software out to market. There are enough buyers in that ecosystem today to actually have revenues and cash flows from enough buyers and not depend on a single buyer, which might be
Yeah.
a three-letter
I think
agency,
that's
right?
right. I mean, there's componentry, and I haven't done componentry. That would be like buying a solar, investing in a solar panel startup. What I have done, so this is a really nuanced point. So, YC had like 50 of these companies go through reaction thrusters for a satellite, different things you would add to a satellite. I haven't invested in any of those. But what has changed is a small fund like mine, 75 million. I can be part of a $5 million round, and a space startup can make meaningful, irrefutable progress where they can raise future capital at a higher valuation. 10 years ago, 15 years ago, it was impossible. It's the activation energy. You'd need 50 million to take the first step with a space startup. Today, you can take the first step for about 2 million bucks. You can
Okay.
cloud space, a few of these things, Peapod standardization, 3U CubeSat format. There's all these things where like you hear about this. Eighth graders can launch a satellite. I mean, like that is important, just like eighth graders can tinker with an Arduino. So space has become tinkerable, and that allows not that my companies will only use 4 million and sell for 100 million, and that's not the exit or capital path I'm going for. But in space, it is that they can have a meaningful chunk of work done and a meaningful demonstration for 3 or 4 million, and that wasn't possible in the past. So um, there are other folks who are looking for modules and components, and that's still tricky as it relates to there are still a smaller number of buyers, but the companies I've backed are sort of applications. Loft Orbital allows payload hosting. You can attach your payloads the same way you send your software to AWS, and AWS runs it. Loft Orbital, you send your payload to us, and we attach it to our satellites and run them. Muon Space has to do with climate and intelligence gathering, and then a new company I'm doing has to do with communication.
How do you think about exits for companies in these categories?
Mhm. Yeah, it's a good question, and it probably applies to all of the Ubiquity off the beaten path categories.
Mhm.
The naive approach is build something people love, and you'll make a ton of money. Uh, in this case, we have the pro, which is we're building something in a category that has not seen this amazing technology. However, the incumbents are probably low margin, mature industries that don't have a ton of cash and aren't going to pay premiums on exits. So it's this tricky dance. In 2014, when I co-led this investment in Rocket Lab, the company's worth $45 billion today. We invested about 1,000 times, more than 1,000 times lower valuation. I wrote the whole memo. It's public. So if folks want to Google Bessemer Rocket Lab, you can read the whole memo. But a lot of that memo contemplates this idea of like, what will exits be? Will this be treated like a government contractor like Lockheed Martin? Those trade for 1 times revenue. Or will it be treated like a tech company like Google or Salesforce, 20 times revenue? And we didn't know at the time. And a lot of it has to do with growth potential and things like that. So this is just an ongoing concern and it's still true today, like with Anduril and sort of the defense tech companies, will they be 1x or 20x revenue, and how much of the dance can you do? And you've seen Palantir do this dance. Palantir kept a Palo Alto University Ave address way longer than they should because they wanted to sound like a tech company, not a Deloitte style consulting company. That's why they call them forward deployed engineers instead of consultants, because forward deployed engineers gets you a better multiple. So there's this ongoing tension as to what the exits look like. I'll tell you with Rocket Lab, they did SPAC in 2021, and they went public. And there's enough there, both in terms of a stable business and meaningful upside, that they've been a very success. I think arguably the most successful SPAC in the whole wave of hundreds of SPACs. And so I think with these off the beaten path companies, you want to aim for the ability to be a standalone public company, because you're probably not going to get fully paid as an acquisition from an
As an
incumbent.
acquisition, right, right. So really, so you are, as you're evaluating these companies, you are looking presumably for that opportunity to be a standalone,
Yes.
multi-hundred million in revenue company. You really it's a little bit on its head if you look at the traditional software market. If you just look at the data, more than 80% of the exits in a portfolio will be through M&A, and it's only that handful that actually go public. In these markets, it's that M&A world, and that's why I asked the question, is it's a question mark because the buyers are 1 to 2x pairs. That ain't a venture exit. So you really have to build a case as you're underwriting these that this can be a
Yeah.
standalone public company.
And
Uh,
that's true. It makes it sound tough. It's only for a small window of time. As we have, I mean, all of life is a game of house of cards. But as we have, um, like, money is a theoretical construct, just to be clear. But like, as we have Anduril, now Anduril could buy companies, and
right.
you would inherit Anduril's multiple. I mean, Anduril's multiple again is made up by private investors. But so as we have leaders, and Halter will one day start buying companies. Rocket Lab has been buying companies. So that dependency on like the Lockheed Martin 1x revenue thing is only until a next gen company emerges, and then they could be your acquisition, at a higher multiple.
Absolutely. And as a venture investor, you're not in this for a 2, 3 year window. You're looking at generational shift. You are a
Yeah.
patient investor that has a longer hold period in which you're betting that the market will evolve. Look, all our LPs would be much happier if only there were a lot more public companies, right? So someone needs to still go back and fix the public market. So we just
Yeah.
need more public companies, and that's will be good for the ecosystem. Anyway, jokes aside, tell us a few things that you've invested in recently as we wrap this up, and it's okay to mention it on a no-name basis, so that our founders here listening to this can get a peek into what the future is.
I think that's a great question. Uh, um, all the Ubiquity companies sort of take a domain and turn it into software. So one I invested in not that long ago takes the domain of seeing eyeglasses and turns it into software. Now, if you have glasses, you know that the way you get glasses, it feels like it's 1850. You go in, a guy puts you in front of this contraption like this, and he turns something and says, "Is this better or is this better?" And you think there must be a better way, and it turns out there is. So iBot is a 90-second vision exam mediated by a remote offline doctor. You walk up to it as a kiosk. We now have many of these in the real world, including in many in Walmarts now. The view for a consumer is you can walk up in 90 seconds, get your prescription, and now you can purchase glasses. The benefit for Walmart is many of their stores don't have an eye doctor, and then many of their stores do have an eye doctor. So they know, and this is gets to the ROI of deep tech. You don't want to bet like, oh, if I just did this, it'll work. Walmart knows this much in revenue with an eye doctor, this much without. So this delta here, they know they could boost the revenue this exact amount if they had an eye doctor. So they're willing to pay, meaningfully for iBot kiosks and many other retailers. So this is predicated on a software beyond the screen approach. We have a new kind of sensor. It scans your eyes. It applies some machine learning. We have a couple uses of NVIDIA GPU inside. We have a pool of human optometrists helpful. So it's kind of a full loop service. We also have some in the deep tech category. We have some use for it today. And then this coming wave of facial computing, things like the Meta glasses, the Apple Vision Pro, we know that's coming too. And an enabler for that is to quickly diagnose, offer your prescription. So I like the idea we have 1 foot in today and 1 foot in tomorrow. So we're levered across two different temporal trends for this
Yeah, let
company.
me put in a Boston plug there. We know that company well. Matthias Hoffman, fantastic founder, built the chops at Net3, which is where I think sort of this concept was. And it's a Boston company. I think their
Yeah.
first kiosk was in the Burlington Mall
Oh
in
yeah,
Boston.
exactly.
So for those listening, if you are an eyeglass wearer like most of us, then and you hate that book an appointment to get your glasses tested, you can just walk into an iBot booth and get your power examined in and
Yeah.
out.
Yeah.
So plug for you, great company, and love
And
love the fact that you picked a Boston company as an
I know, in the
example.
Boston ecosystem, and they're
Right.
not going anywhere, right? They love Boston. They're staying there
Yeah.
for a while. And then Another investment that is worth talking about. Again, it's sort of off the beaten path, which is an important part of this whole idea of being non-consensus. Today we can talk about Halter being a billion-dollar company, but for the first 5 years, people were like, "Sunil, what the hell are you doing? That doesn't, I didn't give you money to invest in cows," and now it looks a bit smarter. Similar, when you think about school buses, like that's not a place you go to make money. You and I might be talking, 5 years ago. Everyone knows you don't make money in K-12. I've heard that, in the venture industry forever. BusRight is a company, a Ubiquity backed company where I led the seed round, largest investor. And what they do is digitize the school bus landscape. So it starts with a tablet they install on school buses that allows the driver to get turn by turn routing. The routing is not static, it's dynamic based on the students who's calling in sick that day. The parents get an app and they can see where the bus is. The students badge on. So there's a little bit of safety and security. So you understand where your student is along the way. Transportation directors are the buyers. So they're not K-12. They're empowered with their own budget. The sales cycle is much shorter than a K-12 board school decision. And this company's grown extremely fast. We are off to the races, and revenues ramped even faster than a typical SaaS company with great gross margins. And again, just applying this software beyond the screen approach to a sector that has been overlooked by technology in the past.
Love that example. I actually read about the announcement on that one. That's a
Mhm.
fantastic one. Yes, and
Yeah,
which
they
parent doesn't
were.
want to know where my
Yeah,
kid is on the bus, right? So,
exactly. And they were
yeah.
they're sort of Boston, New York, as well.
Yeah,
So
yeah,
another East
that's
Coast.
right. That's right. Yeah. Excellent. Well, that's a fantastic way to wrap this up. Really delightful to have you on this show. Learned so much and such a differentiated strategy, focus, and firm. And you are very much a value add partner to your portfolio company. So all founders listening to this should they be building something off screen, you should be their first call.
Yeah, I would love
Uh,
that. Reach out. My
yeah.
email's all over the website, and then just live your passion, be nerdy, wear it on your sleeve, and let's go. So
Absolutely. And that goes for our business too. Yeah. With
great.
that, thank you, Sunil. Thanks for doing
Cool.
this.
Thanks,
Okay.
Alondra.